We are awaiting Ford earnings after the market closed today. That stock down almost 20% in the past year. And GM said last week that it is still trying to work out what its financials will be like. It's reassessing guidance while awaiting clarity on auto tariffs. Let's get more from Tom Narayan, lead global autos equity analyst at RBC Capital Markets. Tom, thank you very much for joining us. Obviously, the automakers are still trying to work out what the impact of these tariffs will be, but they'll certainly complicate life. Apparently, in terms of Canada-US movement of autos and auto parts, there's going to be enormous amounts of new bureaucracy.
Yeah, I mean, I would agree. It's definitely a very complicated time figuring things out. One thing I will note, though, and what we've been hearing from GM and also some of the auto suppliers last week and the administration is an interesting increasing optimism is starting to come up. The administration had an adjustment to their tariff policy that allowed an offset to non-USMCA compliant parts that helps companies like Ford and GM. Also, the suppliers, the auto parts suppliers got a nice reprieve where if they are USMCA compliant, they don't get tariffed. So I actually think we're starting to feel a little bit more positive. Expectations, remember, are so low that perhaps there could be a time to start getting a little bit constructive on the group. But as you said, a lot of a devil in the details.
That's interesting. I mean, broadly, would you say the Ford and GM anyway, have they priced in the worst of the tariff damage?
I wouldn't say they priced in the worst case. The worst case is we don't know what the worst case is. Like, are we going to go into a recession? What happens to volumes, right? If they have to price higher, it's unclear what happens to people like you and me if we're going to buy a car. Mm-hmm. But just the direct impact of the tariff to them, in fact, in terms of the trade flows, that has, I think, been priced in. So to that extent, and by the way, there's a chance that there's deals being made between the government, between the U.S. and other countries, right? USMCA gets renegotiated next year. What if the U.S. strikes a deal with Korea, where GM imports quite a bit of cars from? So I would say the direct tariff impact on the car companies themselves, not so bad, but it's really a question of what happens to demand, right? The economy, the consumer, that's what's unclear.
And I mean, it seems like a given we are going to be paying more for cars in many cases.
That's absolutely true. Yeah. And to what extent will consumers continue to buy at elevated prices? The one thing I will say is we have been doing that for the past few years since the pandemic, right? Yeah. Car prices have gone through the roof. And part of it is, North America is dependent on cars. They just are. And you had a lot of pent up demand since the pandemic. Mm-hmm. So people have no other choice. They have to buy the new car. Now, maybe the used car market picks up in the near term to pick up some of that slack. But longer term, it's unsustainable to just have less cars. And so that's, I think, what a lot of these car companies are banking on is the fact that they'll be able to pass on these tariffs to consumers.
What's your rating on Ford? Can you remind us, Tom?
Yeah, I have a sector perform rating on Ford. Mm-hmm. There's a lot of things stock specific with Ford. They're trying to fix their EV business, right? That's still generating losses. Their professional business has some headwinds this year with electrification. So it's some stuff like that. But in regards to tariffs, I think Ford is actually the best positioned. Mm-hmm. They produce the most of their exposure is domestic in the U.S. So in that regard, I think they're actually decently positioned. Obviously, if car prices go up a lot, that's going to impact all of them.
What about GM? Would you be a buyer of GM stock now with new money?
Yeah, we have an outperform rating on GM. They reported last week. I think there's a reason you could like GM. Their dealer inventories are lower than Ford's. They dominate the large SUV market, which in that market it's less price sensitive. Consumers are buying these. So they have that. And also, the biggest part of their tariff impact is on the Korean imports to the US. And there could be a deal with the US and Korea that would help them dramatically. So, yeah, we would prefer owning GM in that regard.
Tom, we'd better jump. Thank you very much. It's always great to hear from you. Tom Narayan, lead global autos equity analyst at RBC Capital Markets.